To be honest, if Doug didn't mention it and didn't surprise me with this, like 2 hours, I was like, come on, man, what? Why would you take this? But anyway, once this happened, I thought, all right, that's the wrong template. I have the missing indicator here. Hold on. I need to go and put this on. Oh, it's already there. Why is it not showing? Oh, of course it's not showing because of what? I don't know. Why is it not showing? It should be showing, but for some reason it's not. Interesting. I don't want M5, so you want 60 minute. 1440. There we go. This is funny. So the fractal fib indicator that Snom created for me, this is probably one of his first few indicators that he created for me when he was learning himself. This, yeah, very nice. Absolutely fantastic. This is a very good indicator for our purposes. I want to be long only above this box and short only below this box, unless these two lines are quite far apart, and that's a different thing. So when we were trading earlier, let's do a little recap, right? We had tight box, these two lines were intact, going down to M5 to do our so that's the London Open here. No, not there. Here. That's the London Open. This is our overnight range, so obviously we put a line there. Can you see how market hits that overnight range? Hits it, and the fact that it hits it and reacts to it also means that there isn't enough power in there, right? There isn't enough bulls and bears going on. There's a tussle going on. So going to M1, it's relatively easy for me. Over here, where's that red line gone? This is weird. Didn't I just put a red line, a vertical line in here? Or is it this? Sometimes some of the indicators do that. They delete lines. Didn't I have like 3 lines? Oh, there's, oh, what?
The indicator's not.
Okay, that's fine. Did I put line on yesterday's? Did I put a line on yesterday's London Open? Most probably I did, yeah. Yeah, here it is. Okay, now I can see it. So that's my London Open line. I'm going to put it here. Deja vu, huh? All the time. So that's the overnight range. As the London Open's price is going down, you would be expecting it to go down. Instead of going down, it goes up. Goes up, starts to go down. Sometimes I might find myself short here. Not today. Wanted something clear because I already knew this tight box, just like yesterday. Tight box, tight box. If H1 is tight box, I don't want to trade it unless it breaks out. Right? Going back to M1. See? Comes down, hits that level. That's the H1 box low. Goes up. Doesn't clear these levels. These levels are important. You want the market to clear those levels. Instead, what Dave and Sam did, they went long here because they were on the 12-second chart. And I disagree with that bit. Like, if the market is doing this stuff, you shouldn't be on the 12-second chart. But both of them are seasoned traders, so they know what they're doing. I'm not saying they shouldn't do it or whatever, but I don't do it because of that. I've paid rent on these. But when the market starts doing stuff like this, nice and clean, clear candles, knowing that you are in the range, you can still trade it if you know what you're doing. Like for Dave and Sam, who's been trading for like more than 5 years, they caught this inside on the 12-second chart on a pullback. If I wanted, I was like very close to doing this, but I thought, no, now I'm gonna wait. And later on, when I thought about it, I thought, all right, if you are focused looking at the 12-second chart and all that, and then suddenly the market moves and then pulls back like this, yes, it makes sense. So the obvious targets there would be these levels. Obviously, it did not clear it. Gave us a reversal opportunity, a nice fruit long, which I didn't take, obviously. And then this and this, and somehow around here, yeah, I was very keen on it. I just took it and didn't even touch it. Just let ATM deal with it. So the 2-hour target was up there and it hit it. That's where the picture goes. So I'm on the wrong account at the moment, so I can't drag and drop. And then after that, you didn't have to touch it at all. And there's another reason for that. Who's in? Let's find out. Okay, we have Alina, we have MH, we have Doug, we have someone new. Sorry if I pronounced this wrong. Ziza, or is it Caesar? Something like that. Anyway, welcome. Hello to you. Thank you for joining us. Okay, so this is where you and Doug came around, right? Now, please explain to me, like, why was this an exciting opportunity for the both of you all of a sudden? If Doug can hear me. If not, then Alina. No? Okay. Oh, okay. That's an interesting. Yeah, this.
I saw it probably as a setup to
Over here.
But it's not the ones you like because it didn't come after a setup one.
Yeah, because it. Yeah, well, it was just a volatility breakout. It makes sense to me to trade it here because this is the confirmation of the volatility, momentum, that momentum breakout here. Like this was the initial confirmation and this was the pause. So when somebody traded this, yes, fine, perfect for the 12-second chart or the micro pullback. Same for this one. Goes, that you're in a range-bound market, where the levels are, right? Comes to the level, breaks the level, goes outside it, hits this level, pulls back, but doesn't cross that level. This was the H1 box low, by the way, at that time. Still that same level, as you can see. So I took an entry here, and then I got out. And then I thought, well, I think it was a wrong exit. So I got back in. And I got myself another 21 here. So that was really good. So a little small, -4. So plus 24, -4, and then 21 down. And that's it. I called it. I think that's all I'm looking for.
I got in under that box level.
Here?
So I just took 5 on that one.
Here?
Yeah.
Well, not bad. Yeah.
Yeah.
You should have taken 10 though.
But,
it did go.
Yeah, I should have. I didn't trail and I didn't react quick enough.
Trail. So were you looking at the 12-second chart?
No, on the M1.
The M1. Yeah. I think if you take an entry like this, you should know that it's late now, that you need to scalp it, that you can't trend trade it, right? You know that I know some people laugh at it, but it's been 10 years, and I've been saying this. We are M1 trend followers. But at the same time, because we trade M1, we are momentum trend followers, right? So you know that this is the trend down. But around here, you know, AO is peaking, there's a strong move, a pause, a second leg. It's kind of possibly the end. Like, we've seen it so many times that it would take a pause here and then continue down, right? So this is scalping opportunities. If you ever go there and you get 10, 12, that's it. I would run quickly. Because it got inside the range instead of on the breakout, I got a bit more pips out of it. And it was based on this seed and based on this reaction to the level. And I thought this probably will start something, but it didn't. And that was then proven here. Goes up, pulls back, goes and hits that box level, you know, goes above. Can you see this? Test the box low, and then stays inside the box. Tries to break it again. I'm having breakfast at this time anyway, or brunch, let's call it. And I'm not interested in this breakout.
I did jump in on that little run down to
this one.
Yeah, that one. But I didn't get very far.
You need some discipline training.
I
Okay,
need
so
lots of discipline training.
what is the logic for taking this? Like, what made this attractive to you? Like, what's your perspective on this?
I guess because it got caught up in the alligator. We had a red dot. I just, yeah.
I mean, it's not a setup one, right? And
No.
I mean, if somebody would say, okay, this is not a setup one. Yes, of course it's not a setup one. So what is this? Well, that's our pullback entry, you know, momentum trading. Okay, so that's what it is. And why do we do that? Because we found that trading momentum, when you have a momentum breakout and then a pause, this actually converts into a setup one. So I trained myself for about 6 months to actually take these on the 12-second chart as a setup one. And then I learned the pattern for this on the M1, which is just this. So I don't need to go to the 12-second chart anymore, which, you know, reduces my time. And the other benefit I wanted to train myself for, to be able to take the 12-second setup one on the M1, was because in the new year I wanted to apply this strategy. So as you can see, there are so many charts. Now, I'm not going straight away for this. This is the other account. But the way I've traded this week, and will continue to do, is euro dollar, the pound dollar, and dollar yen. These three charts and the DAX. This is what I'm going to be looking at on the M1 chart, and I will make a decision. Like, first priority would be, you know, to hit it out of the park. You know, like Ricky Ponting. Bowler comes in, I'm batting, I'm waiting there. It's going to be a 6. But then I assess the situation, and I'm like, okay, it's going to be a 4. And then I assess the situation, oh, if it's not a 4, then at least it's going to be 3. If not 3, then 2, right? You get my point. 2, 1.
Yeah.
If it's not 1, then I'm like, okay, I at least a dot. I don't want to give my wicket. So then it's going to be a dot. So if we get DAX moving straight out of the get-go here, that's it. Like, if this was to happen straight away here, I got my pipes, I got my pips, I got my target, that's it, I'm happy. Now I have two choices. Either I can walk away if I'm still enjoying myself and I still want to trade and the market is moving, I can continue to trade it or look at others. But if DAX is doing something like this, I can go and see, okay, what's euro dollar doing? I'm going to go to the hourly chart, memorize this, right? I'll have this in my mind. Now, the reason I was trading today euro dollar is that I saw this. So this is London Open, and I'm seeing that there's a big box here. We have a 3 down, 4 up, possibly a 5 down is going to happen. I know that on the daily chart, it was on an uptrend, pulled back, it hit the daily box low, and then yesterday was a pull back up. So today probably it will go down and touch that again, which on H1 translates to there's a 3 down, 4 up, maybe there's a 5 down. So it might come down here and stop or test that, but this translates into a move on the M1. So if you look at the M5 chart, when it broke out, so I'm not going to go blindly, broke out, came back up. I saw it here, I didn't take it. It wasn't ready. I could have gone down to M1, you know, for this and taken this. This would have been perfect. I did not take that, but I took a scalp here. Then I took this, got out. Then I got in here. Kind of cursed myself for not respecting these levels. And I thought I'm going to pay a price. But I was ready to just let the trade be. You know, if the stop loss was to be hit, it's to be hit. But luckily it's started going down, so I added on here. This is where I will add the other picture. I took a trade here and I took a trade here, made a mistake, went seriously heavy lot, which played in my way, you know, positive mistake. Got out here and here. So pip wise is not that much, but it doesn't matter because I have almost zero spread. And, you know, if I can make 5 to 10 pips on an M1 chart on euro dollar without spread, I'm happy. We could probably sometime trade the M5 setup as well. Probably some of you might be thinking this is the H1 M5 method. This is not the H1 M5 method. This is just purely trading the M1 chart. As in 4 charts on my screen, and I'm flipping between them like this. And you know how I'm able to do this because I have the mouse. I have these 2 extra buttons in my mouse. You probably saw it in one of my videos. I have programmed those buttons to Control Tab and Control Shift Tab. So Control Tab, it goes to the next one. Control Shift Tab, it comes down. So if you don't have the mouse, then you can just use the Control Tab on keyboard like this. Control Shift comes back. So instead of, you know, like doing all of this mechanical movement and click on them, I can just go. But if you click on one of the tabs in between, you know, it breaks the sequence. So to bring it back to the sequence, you click that, you know, the tile button, and then start with the top left. And that's it. Now it's in sequence. It's going to go in sequence back and forth. Right. So, oh, pound dollar. It was, so the movement on pound dollar was like yesterday it went up. We had a nice setup one, the H1 M5 method over here. Let's actually just look at that. So if you're looking only at the hourly charts, when the market consolidates like this, it would usually create a lovely setup on the M5 or on the M15. So on the M5 it did create a setup. The wave 4 was quite long going sideways, but all you had to do was have your pending order above the highest high here. So trend following, right? Buy high, sell higher, right? Buy high and close even higher. So there you go. You buy here and then you close somewhere there and let the ATM do the trick. So today, when I was looking at it, you can see it's hitting the daily box high, which is this. So we can see that the trend is up, but it's kind of up and down. It hits that level and then reacts to it. So it's kind of like going into a wave 4. So it wasn't really attractive for me to trade, but it did actually break out, and I wasn't here at that time. If I was here, I probably would have taken this trade, but I didn't. That's fine. Okay, Swizzy I didn't touch and I won't touch for now, but I did trade dollar yen. I think 2 things will happen with this is that, one, it helps me stay focused. I keep flicking between the charts and that kind of keeps me excited. Like I mentioned earlier in chat, 2, you know, boredom is a dangerous thing for a trader. There are 2 ways to cure boredom. One is to stop doing the activity that is boring you and do something else. I can't do that. I don't want to do that because I want to trade. So then you have to do something about the mechanism of your trading so that it's not boring. So after years of just staying on DAX, if nothing happens, just chat and do nothing, I finally decided, you know what, I'm gonna trade other charts if they're moving. So that's what it is. Okay, so dollar yen, let's do a thorough analysis of it. So the daily is like so, it's above the daily box high. Hold on, here we go. So on the hourly, it's actually pulling back up. And on the M5, this was the situation. So M5 broke out over here. We can see that it's above the H1 box low, which is this. So again, the box is very big, so you can play inside it. We had the daily box high there as well. So let's mark it and go to the M5 chart. It's going up, and I think I took my trade here. Not here, here, because that's the cross of zero line, right? I took the trade here, but because the dollar yen is like, you know, ATR is very low, only like 3 pips, it moved up, pulled back. I had my stop loss to break even, which turns out to be a mistake, because if I didn't, then I would have had my 2R somewhere up there. So I was out, and then it went. I think in normal days, I'm going to keep dollar yen on M5, unless elasticity wise, dollar yen is the most elastic pair. Like in normal days, it would stay very tight range, like, you know, 20 pips. Look at that. Like, or here it's 20 pips. This is the most elastic one. And when it hits, when volatility hits in dollar yen, it expands quite a lot. You know, like a dollar yen, like the pound yen is kind of almost always spiky and volatile. But the dollar yen kind of goes into those periods where it really slows down, which is why, you know, the box seed method, where we only take the seeds, this is a very, very good pair for it, because sometimes you would get a seed like this, for example, this one, very, very small, you know, 5 or 6 pips. So if you took a trade here, 7 points, and then you just let it run all the way till either here or here, it can produce like really good risk reward ratios. But obviously that's a different strategy, one that somebody can pursue if they want to. So
Can you hear me?
Yes.
You want to speak about last night? You said you have a strategy I want to test. You said remember me at the live. Can you talk about it?
Yes, let me just finish this recap, then we probably
Okay.
talk about that as well. I just wanted to mention one more thing. Like I've started with 4 charts, and I probably will add 1 or 2 more over the next few weeks and see how I feel about it. But I think if I add the, let's say, dollar CAD, it's going to be predominantly H1 M5, but I'll be sitting on the M5 to see what happens, you know, if it's moving. So obviously today it's not moving. It's not that one of those days. Australian dollar, different. I did see Kiwi today. I saw this candle here, and I think I mentioned it in the chat room that Kiwi is moving. So as you can see, when it did that, 2 candles and then a pause candle. So this is the H1 M5 setup. If you go to the M5, what you see is a move, momentum breakout, then pause. You have the inside box, and if you trade it here with 10 stop loss, you probably hit your target point over here. Pretty good trade. Pretty good trade. Don't want to touch gold on any other time frame, but sometimes, you know, when it does things like this, one can trade it even on M5, on M1. I haven't been lucky on anything other than, I mean, gold is surprisingly on Forex. Gold has been my most profitable pair, but I think it's got something to do with that's because I apply a specific strategy to the gold, and that specific strategy is simply that I don't trade it on any other time frame. I only trade it on the hourly. Probably that is one thing that is contributing to this overall success of gold. And the other thing is that I've always, like almost always, taken, if it allows, 5-point stop loss and 10 target point. That's almost always been the case. So it wouldn't have been applied here because it's a bit more volatile. So stop loss would have been 7 or 8 over here if I traded. So that's different. But in normal cases, when there's a setup like this or setup like this one, you see here I needed a very big stop loss. So I normally go with 5. So these things kind of get filtered. And if I take this one, for example, I would still have a 5-point stop loss and a 10 target point. Or maybe if the box is too big, I probably could have done 10 and then 20 with that. But in most cases, you know, setup like these is what I've taken. And if I get in here, I'm usually out at 10 or 15 stop target point. It's just these days that 5 is not good for this. You need 10 stop loss for gold these days because it's volatile. But all the other years, 5 used to be like pretty good for the hourly. So maybe that is one of the factors that I've used a very simple and strict way of trading it. For example, if I were to trade it here, yeah, I need 10 stop loss on this, definitely, based on this volatility. If I go in here, I need 10 stop loss, so that means I need 20 target point in the long run. I can even try 25 on this, but 20 would be good. Before that, you will have to clear this level. So in that way, if I just went with 5 stop loss and 10 target point, right, then I can get my 2R using just this small move. I hope this makes sense. Okay, specific strategy. A specific strategy for that I was talking to you about, Hemich, was it was conceived back in 2010, used for a bit, put away because I was fascinated with M1s and all of that, and then run a thorough test back in 2015 and 16. I shared that 1 month beta test with you as well. It can easily give 10% a month if the market moves, and all you need is 4 pairs: euro dollar, pound dollar. You can have the Swizzy if you want, or dollar yen and pound yen, or make it 5. But pound yen will be provisional. These 4 pairs, right? Let's suppose you don't have any of this on your chart. That's all you're going to be looking at. You'll have your chart on the hourly, and this is your template. This is the box seed method. Instead, I mean, this one doesn't have a box. You don't need the box. You don't need this either. This is on one of the accounts. I use this strategy even now. Every now and then. I'm not really religious about it. I sometimes go to that account. I will log in, and I would take trades like these. So all I do is that I want, so this indicator, the seed indicator, basically is set to create a line. It's a line in sand at the Frankfurt Open. So that's my starting point, right? That's the whole concept of it. So that's my starting point. And then after the starting point, I want an inside candle. A tight inside candle, not a candle that 30 or 40 pips big. No, no. I want it very, very tight. So if this was the candle, and by the way, this is still my signal. I can still take this. I can take this in 2 ways, but let's not complicate things. Let me, to begin with, I want to find a really good example. Yes, that's the one. Okay, so you see this one?
Yeah.
You have an inside candle, and right at Frankfurt Open, before it happens, you already have an inside candle. So what you'll do in this case is, because the previous day, right, the previous day low is below you, so you'll be biased with longs only. Can you see? The trend is the trend of the day concept. There's a video about it as well, right? The trend of the day. So your trend of the day is this open line. So if you compare it to yesterday's trend, you know that yesterday's trend is bullish. So if you wanted to not miss, you could have set 2 orders. One would be buy, one would be sell. I think the sell order would be triggered and there would be a rent. It would be stopped out, and the long order would be triggered. And as it goes 1 hour in your favor here, your stop loss would have been just about, let's call it 11 pips. So if it goes 11 pips in your favor, you will close half and you will leave your stop loss at the original spot. Because if the market came down a bit, you give it that wiggle room as well. Otherwise, it just keeps going in your favor, and you don't exit it unless it hits your specific target. And then there are two options with you for trades like these. So option number one is to make it an intraday strategy or a swing strategy, where you would just trail the swing lows, right? Or the box low. So for that, you need to have the box on, or if you can just make up the, with your eyes, you can say, around this time, your stop loss will come here, then it 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 will be here, and you'll be stopped out. So you will have a nice 1:10 trade on which you will make 5.5%. Why? Because if you risk 1% here, you would have taken half here at 1:1, and then because this was 1:10, you made 110 pips. You would have made 5% on this, plus the 0.5% that you banked, so that's your 5.5% trade without doing anything. So the win rate of this is less than 40% because of these things, but you will get massive, gigantic, mammoth trades with this as well at times. Specifically, if you catch some dollar yen or the pound yen. So, and sometime pound as well. So let's go to the pound, and I will show you this. So for me, I also take some entries with this. Let me just go back to the euro dollar example earlier. See this one? Let me bring the normal. I'm just explaining things haphazardly. Can you see this? So now that I've seen that price has gone up, and I have this seed entry, right? So I'm going a bit advanced now already. Originally what we did was that if the high of the seed was not broken and price did not go below the low, below the open line, I would still consider that seed as a signal. I would leave that pending order there, and my stop loss would still be there. So if it got triggered here, I would still consider it that way. But then with time, obviously, if we have this Hunt 2.0 cherry like this, then instead of going there, we would go long here. And then same concept would apply. And this would have been a very powerful trade, because around 13 points you are break even, and that's the concept of free trade. It does two things. One, it makes your equity curve very smooth, which is very important. The second thing it does is that it gives you free trade mindset. You're not losing anything. Your brain thinks completely differently. If you think about a trade that's 100 pips up and you haven't taken profit, you think, I don't want to give it back, and that kind of mindset and stuff, and it will play with your mind. But if you train yourself, I've already taken profit, I'm not going to lose on this, it will be very easy for you to let it run. Why? Because, why is it important to let it run? Is because for this strategy and for any other strategy, for trend following strategy, breakout trend following, whatever, the strength of this strategy is to basically have an entry based on a very small, tight range, so you can have bigger lot sizes. And then because the win rate is low, you need bigger win-loss ratio trades. So this would give you 1:5 to 1:10 very, very easily. Like I have caught 500 pip winners on this. I think one of the best trades that me and Grant took was dollar yen, which was somewhere back in 2014 or something. Something happened with the dollar yen, and his entry was 5 pips. 5 pips entry. It was like a box like this. A seed like this, very small one. And something happened the day after, and it went up. And when he got up, he'd made 500 pips on a 5 pip stop loss. Literally doubled his account on one trade.
Exit strategy is, I think, it's important. How do you want to exit?
Oh, yeah, that's the most important thing of this. So we have two options for exiting this. That's what I'm saying. Either intraday or swing, or basically the way the professionals have done it, the way that other people who've used it, the guys who have made 1:127 trade on this, I have seen with my own eyes a person who took $550 risk and made $127,000.
Wow.
Because the technique is this. If you remember, I don't know if you remember, but back up to like 2012, after 2008 and 9, the volatility was extremely high in Forex.
Okay, I think I have an idea. I can say.
Let me just finish this final thought,
Okay.
because that's the most important bit that I'm talking about. So first one was that intraday exiting, which was on the hourly charts. The second one is basically the toughest one, the most profitable one, but I haven't found anyone other than the professional guy who could do this. And it's things like this. Let's go to July somewhere. Hold on. I'll show you. Right. Is it this? There was an example on euro dollar. So this one you couldn't have kept. Let's suppose this one. Okay. Now I won't take this because it's late in the day, right? The thing is, the other rule with this is that you only want to take the first 6 to 7 candles, not all day. So let's suppose this was the one. So if you took this, right, and you convert it into a free trade, and the daily trend, oh, that's all the way up there. Hold on, I'll go to May. This is where the boys make money. I think it was this one. Let's suppose it was this one. Okay, let's suppose it was this one. I'm struggling to find the original example.
You got the main idea, and I know what to say.
You know the idea, right? So this is where the entry was, right? On the 25th of May. Your risk is what? 8 pips? Let's call it 10, right? You convert it into a daily trade, and you put a 20 simple moving average or something like this, right?
Right.
And you let it run. I mean, here it kind of would have been a little bit difficult, but let's suppose you did manage to let it run, then at least you got this much. If not, and you were still willing to let it run, then this is that mammoth gigantic winner where you have turned a 10 pip trade into, let's say, 1,000 pips.
Yeah.
So double your account.
Yeah.
One trade. Why not? So yeah, that's the whole strategy. It can be explained. That's why I said I'll explain it to you tomorrow if you wanted to do it. 4 pairs, very, very, very simple, and it's robust, and it's statistically proven. I have that statistical.
I can't say I have a similar like this, but you don't believe it. I saw that in ACD. I have I think a lost piece of puzzle in ACD, and I think you mentioned that the trigger. It's really important. In ACD we have a pivot, okay, and in this pivot we can trail the position to the longer term.
Can we talk about what we have, please?
Yeah.
Instead of the other things.
Okay. I want to filter the position and go away from the wrong positions, okay? I think the first wave and the pullback the second, if we can get in the third wave, the positions go very good.
Look, listen, Emmett.
Yes.
Are you trying to make the strategy better?
Yeah. I want to.
Don't need to.
Like this.
Don't need to. Because if you do that, then we'll have to spend that £10,000 again on the statistician guys who can test the 30 years of data for us statistically and then come up with the data and then prove it to me that those parameters worked. So the data that I'm giving you right now thousands of pounds have gone into it, just testing it. To statistically
Okay.
prove it, to get, so they tested it on 30 markets with 30 years of data and 3 different types of trailing mechanism. And it came up with 1.222 and 1.25 with 2 different management profit factor overall without filters. So which means that if you just apply your
I have an idea to
Mhm.
trading the position and get position better.
But you cannot
I
do
don't I
that.
don't want I don't want to change
You
it.
cannot discuss that. Why? You haven't tried it yet.
I tried similar like this, I can swear, but I have a problem with the trigger, and you propose a trigger for
Okay,
this.
so that means it's not for you. The strategy is not for you.
No, it's not. No, it's not for me. No, it's not for me.
Okay,
Yeah, I can show you that indicator
I
and the
wasted my
idea.
time then.
If you like, if you no. If you like, I share my screen and show you what I am saying. I don't know.
Maybe
Mm,
later.
you are
I
very resistant to getting a new idea. I don't know.
Oh yes, absolutely. You got it right.
You're very,
Say
very
anything
resistant to
like
saying.
ACD and something like this 5 years before, and I will ban you from my channel. That's how I was. I'm telling you, I've done it.
Mm,
People who posted anything that did not look like the setup one or the EMS, and it's not because I want to protect my channel or anything like that. It's not about that. It's about me. I don't want to hear from anyone giving me
uh-huh.
any ideas about trading, how to trade. I've never done that. So that's who I am. And Grant would literally, he would just bash people, swear at them and everything. Why? Because there are so many ideas out there. There are so many ways. But nobody
Yes.
would be able to prove it to you that this is good for you. Only you can find out that it's good for you. So a long, long time ago, I learned that this is all waste of time. So somebody can come with me and tell me they have this fantastic idea and they trade it and stuff, and I would say, good on you, thank you very much. That's all. Why?
Okay.
The market is not really, it's not an enigma. It's very, very simple. You just have to find an entry technique and then a robust mechanism to manage those trades so you can manage your risk and have a profit factor of above 1.2 on any strategy.
Okay.
If you get that, you just stick to it and be bored to hell. But you're going to be excited when you look at your bank statements because you're going to make money. So that's why. It's no disrespect meant. I'm just not interested in any indicators or any other strategies.
Okay, I forgot to ACD. I want to say something
Yeah.
about your idea, okay?
Uh-huh.
For example, come to 6th of January.
On euro dollar.
This chart, yes, euro dollar or USD/JPY or something.
Okay.
We can
6th of January. Here we are.
take a very successful trade. I think the picture have a delay for me.
Oh,
Let me back to the last chart. What was the last chart? USD/JPY, I think.
I don't know. Was it this one?
Yes, I
No.
think it's
That's the.
H1. H1.
Okay.
Okay, yes, there. That exactly there. Do you see? This is the first wave of Elliott. Okay.
I can't see now.
Yeah, the first, the after, if you enter in the third wave, your trade can be very successful. Do you agree? Or better to say that after creating a new high after a downtrend, our trades can be very good.
Personally, I'm not interested in wave threes.
Okay.
I'm only interested in wave 5s.
And you can see we have a downtrend. After the downtrend, we broke up the low, and we create a new high. Okay, that's
Mm-hmm.
true.
You can say that, yeah.
And after that, if we have the trigger, yeah, that's right. If we have a trigger or seed method, we can take a very good positions.
Right. Anyway,
And win rate goes very well.
well,
I think
let's look at it from my point of view.
95.
I'll
Okay.
look at it this way. I'll buy it here.
Yeah.
That's it.
Exactly. This is the last high correction of the uptrend or the third wave. I don't know. You got the main idea or not? I can't say very good.
Yeah, I understand what you mean. Just based on my system,
Yeah.
we don't care about wave 1 and 2. We
Yeah.
can catch something like this, probably
Yeah.
within a 3. That's fine. We can probably catch something like this over here to trade that. But that's all we do. I just go with the pattern. Man, all you have to do is just find one pattern. And I found it.
Your pattern
It's,
table.
yeah, it's setup 1. I love setup 1 because I can trade it just by looking at it. I just look at it, I see it, bang, I'm short. Bang, I'm short. And similar like this. So I don't have to do all of that analysis and all, nothing like that. Just like momentum. I'll go here, I'll go short here. If I was watching this, and if I assess this situation here, maybe I would have gone short here. Maybe. So that's what it is. Okay, so that's that. And the seed strategy, obviously, people don't get it. Whenever I share that strategy with people, the first thing that came to them is they want to filter it. They want to come with filter mechanism and stuff, and that's where they fail. Because in no strategy, it's not about avoiding the losing trades. If you ever focus on avoiding the losing trade, you will always lose money in trading. If you focus on increasing your win ratio, letting the winners run, you will make money. If you worry too much about filtering, reducing your loss rate, increasing your win rate, it's going to be a problem. The only people who need to have a high win rate is people who trade the scalping. When they scalp at the open and stuff, they need to have a high win rate only if their winners are not more than 1.5 R. So they need high win rate. Other than that, you don't need a high win rate. Most professional traders are sitting at 15-20% win rate because they don't care about the losers. Losing trades are losing trades. They care about the ones that go in their favor. They just let them run. So don't waste time on, my suggestion to anybody would be don't waste time on filtering, trying to find mechanism to filter so that you can get, I've spent years and years on that. Filtering doesn't work because you just never know. At this one moment, you just never know what would happen in the next trade. So instead of filtering it, you just take it and find out. And why you take it is because you have statistical evidence to back you up that if you took enough of those trades, at the end of the next 100 trades, you're going to come out as winner. That's the only way of thinking about trading. If we just focus on getting our entries better and getting our exit better and how to filter, why not take this, blah, 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 doesn't work like that. It's just a waste of time. Many times you would see fantastic setup. It looks beautiful. It doesn't work. And many times you would see a setup is like, it's not really good. Turns out to be one of the best setups you ever taken. So, you got to take setups, one setup over and over and over again, and then check at the end of 20 trades, and then at the end of 50 trades, and then the end of 100 trades. What did you do? For day traders, they have to look at, every day's, how did they perform during the day? Whether they took 10 trades, 20 trades, 5 trades. Were they disciplined? Did they follow the market correctly or not? If yes, this DS score is 1. If not, fine, you go down. The world's biggest, most successful traders, they would go through slumps. They would have like 3 or 4 days down days, and they're down $200,000-$300,000. They're scratching their heads, but they know in the back of their head, you know what? I'm not going to change anything. I'm going to stick to what I do every day, because this is just a slump. It will be over soon. Non-professional traders, when they hit 1 or 2 days of losses, they start looking for new strategies, and that is what fails them. So yeah, here we go. We are not here to discuss new strategies, new techniques. All of that has been done. I have 1 or 2 projects always running in the background, but before I share a strategy with anyone, it usually takes about 2 years. So the low bot strategy took 2 years. The Waltz method took about 18 months. And even then, I create them, I share them, and in most cases I just don't trade them anymore. I come back to setup 1. That's what it is. Now I've started trading stocks, and guess what I'm doing? Setup 1. Let's go to the stocks for a bit. Anyway, Alina, do you have any system for me?
Yes. No, I'm done with all that. I've done my rounds around a whole bunch of different systems, and I've come back to this one, and that's how I found you. So,
yeah, there you go. Because we've all done it, trying to find different system and stuff. It's really, you just have to do your search and then make that system yours by sticking to it.
I think that's the point too, Emmy, is what you were talking about, the professional traders, is you've actually just got to continue to work on your psychology. So you pick a system that's been, traded well over a number of years by someone on multiple markets, and then it's only the difference between your headspace and their headspace that'll determine whether you're getting it right or wrong.
Yeah.
So you're better off putting more time into working on your psychology than you are trying to find different indicators. That's my opinion after chasing my tail for 15 years.
You've met those guys, right? You've done the Bill Williams course. I've done it. And it's that same system with our own flair on it, right? Our own tweaks. And if you look at it, like what we see on the screen right now, it's this is that saddle point. Look at it. The difference that I do is that I want the purple to be correct. I want the saddle point.
I do like the purple line. Yeah. That's really good.
So the purple line keeps us in line with the higher time frame trend. And if you go through those, the course that they have, they talk about, always make sure that you're in line with the 5 times higher time frame trend. Now, they don't explain it really nicely, but I know what it means now, right? You need to have the gator open. You want this breakout, and then you want the pullback. That's it. And then you want to take the saddle point. That's it. This increases your winners. It changes everything.
The purple line just makes it so simple.
That's why, you see, when we started, I wanted to have a double saddle point. So the original book says, make sure that the purple is mingled inside as well, which means that both the time frames are now saddle point, and that means that the squeeze is even tighter. So when it breaks out, it's going to break out like this. So it's very, very true. But then I went on and I brought the idea and I applied it to Forex. I will confess now, it's actually not correct to do that, because for a Forex chart to go like this, the psychology of that is completely different. Are you saying that the entire European Union and the United States have gone dead for a while, right? But you can say that about a stock. Like this stock was quite dead around this time. Why? Because people can, lose interest in a stock, and this is not really a very, very famous stock, is it? So you have it here, it's dead, and if you trade saddle points on a stock market, I think it's going to work. Why? Because when it breaks out, it will break out really crazy, and that's what it does. Look at this. Saddle point breakout, bang. But for me, I'd wait for the bang, then for the pullback, and then the saddle point. So what I'll do is that I'll take a pullback entry. And this is the one that I was supposed to take this, by the way. I'm very, very upset. 771 was my pending order. And then something happened with that account, and we couldn't put pending orders, and then it broke out in one day. Look at that. My stop loss would be a break even already. So,
That's annoying.
well, yeah, I promise that every trade that I take on my stock watch list, I will share every trade that I take. We got late. I got late on that account. I should have started trading it from the 4th of January. I don't know why I thought I'll start in the middle of January. And now I have so many different setups. You see these ones? Like,
yeah.
They all started 6th and 4th of January. I mean, so many that I missed. And I'm so upset. Look at this. So I could have been in all of these on that account. But that's fine. I'm going to have a pending order on this. Actually,
Williams talking about he would have a little account and he would trade his systems for the first, from 1st of January or 2nd of January to the 30th. And if he doubled his little account in that time, then he could have all the rest of his money back to trade the rest of the year.
Ah.
That was his little rule. And sometimes he would double his account earlier, so then he got the rest of his money back from his bigger accounts. He always used to use those first couple of weeks, a few weeks in January, to prove himself again.
Wow. Look at that. The guy was nuts. So much fun to talk to, by the way. Kirk. So Kirk, that's Sam was mentioning this one. I think it's done multiple waves. One here, then one here. I'm not really keen on this one now.
What happened to that signal stock? Should we have shorted it?
Yeah, I think it was definitely worth shorting, but I would still not trade it. Reason being, OTC. It's not even on the stock exchange. It's like an over-the-counter kind of thing. And I couldn't find it on IG anyway, because they don't do OTC. See this? It's come all the way down.
Very good short. When people realised it wasn't the right stuff.
Yeah. If some employee had been gifted 1,000 or 10,000 shares over here, and if they were lucky enough to sell it there, they can offer their resignation and start living a different life.
Excellent. I'm going to head off because it's midnight for me. So.
All right, that's fantastic. Lovely talking to everyone today. Another 1 hour of talk. By the way, I'm going to put a pending order on this later today. There's going to be a pending order on this. GAB. So make a note of that. All right, guys. See you later.
Right.
Good night to you.